This is Alan Bush with ADMIS. In the stock index futures, seeing some weakness developing today. We did have several economic reports overseas indicating that the global economy may be weakening. One of these reports out of Europe coming in on the weak side. Some retail sales numbers from Japan were weak, and also some bearish on balance economic numbers out of South Korea. So there seems to be growing evidence that the global economy is slowing, and that is the dominant influence today as far as taking stock index futures lower. However, traders will soon turn their attention to the prospects of easier credit from the Fed, although even now there's more talk that with Bernanke speaking tomorrow at the Jackson Hole Symposium, that it is less likely that he will announce any new accommodation measures at that speech. The next opportunity for easier credit from the Fed would come at their September 12th to 13th FOMC meeting. Currently, analysts believe there's about a 45% chance that they will announce a third quantitative easing plan at that policy meeting. I think what we're seeing right now is futures are not responding well to bullish news when we do see better economic numbers over the last week and a half. And that is a sign of weakness. In fact, even when we had the minutes from the recent Fed meeting last week, futures could not make a new high, even though the minutes were very suggestive of easier credit coming from the Fed. So on rallies, I would be liquidating any longs. This is not the time to be long stock index futures with what we're seeing. Over in the currencies, the euro currency higher, more and more talk that the ECB has some type of bond buying support plan in the works. But keep in mind, the ECB in the past has had a habit of over-promising and under-delivering, and I think that will be the case again this time. Also, in the last 3 days, we have seen yields on Spanish and Italian debt actually increasing in advance of hopes that there will be a new bond buying program. So markets are not really responding that well, at least the markets that are telling, and those Italian and Spanish bond markets really not performing that well. So that is an indication that we may be near a top in the euro currency, even though it has advanced over the last 3 or 4 weeks. And in the commodity currencies, the Australian dollar and the Canadian dollar, we continue to see a pattern where spreaders are buying the Canadian, selling the Australian dollar. This is basically due to the geographical advantage that Canada has in their export business to the U.S., while Australia exporting to weaker economies such as Europe and in Asia. We favor being long the Canadian dollar, short the Australian dollar, and I think this is a trend that is likely to continue for several months. Credit markets, good gains today. These weaker economic numbers overseas, supportive. The 7:30 U.S. economic reports were friendly on balance. We continue to believe that the main trend for the credit futures market is higher. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.